A very good morning to all our viewers. You've tuned in live to this broadcast on Moneycontrol. You're watching Newspresso with me, Stacy Pereira. And as the drill goes, in the next few minutes, we are going to be giving you a lowdown on all the top stories from across the globe, insights into India, of course, the earnings that have been trickling in, and the latest trends giving you that edge and keeping you informed ahead of the others. So let's get straight to it and get you all that we have from our global dispatch. Well, futures tied to the S&P 500 are trading a flat, we could say, as investors are digesting that batch of corporate earnings from major technology names, which are also geared up for Fed's interest rate policy decision. Now, the Nasdaq as well as Dow futures are both slipping into the negative at this point. But in normal trade, we did see mega cap tech stocks, which were among the biggest movers. We saw Google parent Alphabet, which rose almost 6% as cloud revenue growth helped to propel the company in better than expected quarter. On the other hand, we saw Microsoft, which slid more than 3% after reporting a slowing cloud revenue growth. In Europe, well, the markets there closed higher on Tuesday as investors are assessing that economic data that is coming in, as well as the corporate earnings, while gearing up for this big week where the central bank will also be meeting. Now, the Pan-European Stock 600 index has ended 0.47% higher, a sixth straight positive session, we could say, wherein mining stocks were the ones that jumped about 4.46% to lead the gains on the back of new Chinese stimulus measures, where we also saw travel and leisure stocks then falling by about 0.6%. Now, global investors are navigating this busy week of corporate earnings as well as the central bank meeting, which is going to be in focus. Remember, the European Central Bank will meet on Thursday when policymakers are expected to announce likely a 25 basis point rate hike and offer guidance for the final stages of their efforts to fight inflation. Markets in the Asia-Pacific region, those ones are trading a bit lower, one could say. They've started on a negative note this Wednesday. Investors are pricing in what could be a 11th interest rate hike since March of 2022 by the Fed. Whereas if you look at Australia, the S&P ASX 200 has opened lower as traders there are looking at the key inflation data ahead of the Reserve Bank of Australia's rate decision on August 1st. If you look at the Nikkei 225, that one is trading in the red. Hong Kong's Hang Seng, though, is likely to retreat after recording those solid gains of about 4% that it saw yesterday. Now, the GIFT Nifty, that one, though, is indicating a mildly positive start for the Indian equities as well. On the commodities front, well, crude prices have been inching higher now for the third day on the trot, we could say. Oil prices have touched a fresh 3-month high as signs of tighter supplies as well as pledges by Chinese authorities to shore up the world's second biggest economy has lifted sentiment. Brent crude futures have climbed about 90 cents in trading yesterday, where it's reaching about the $83 per barrel mark. Now, U.S. government data on stockpiles as well as inventories is what is expected later today and could further either take up those oil prices. And to the global cues that we look out for, well, the International Monetary Fund or IMF has gone ahead and raised India's FY24 GDP growth forecast by about 20 basis points, coming in at 6.1% from the earlier 5.9 that was projected. Now, this comes on the back of strong domestic investment as well as a stronger than expected growth in the fourth quarter of the current year 2022. Now, despite the course reversal, one could say the IMF is not as upbeat about India as the government as well as the RBI both have seen GDP growing only at about 6.5% for FY23-24, which is why they have gone ahead and projected this number. Now, the major financial agency has also hiked the outlook on global growth to about 3% from the earlier 2.8% that was forecasted back in April. But it has also gone ahead and issued a warning, adding that the world is not out of the woods yet and that growth is likely to remain slow as the interest rate hike cycle by central banks to fight inflation will continue and weigh in on economic activity. And Israel's parliament, that one has contested those curbs and some of those Supreme Court powers which was submitted by Prime Minister Benjamin Netanyahu's government. Now, the bill was then passed by a 64-0 vote in the parliament there after which the opposition lawmakers abandoned the Knesset plenum and walked out, shouting in protest rather, and commanding a comfortably majority in the parliament. Netanyahu's coalition won the vote on the bill that now limits the Supreme Court's powers to overrule decisions made by the government and the ministers. The proposed change in the law has sparked unprecedented nationwide protests in Israel, backed by banks as well as businesses. In fact, just after the bill was passed, we saw a huge protest take out in Tel Aviv as well, with hundreds and thousands of people taking to the streets. And to all the action that you need to be looking out for on Dalal Street and what transpired in the trading day yesterday, it was rather a range-bound session, one would say, on Dalal Street, ending on a flat note, where the Nifty ended the session below that 19,700 mark and a slightly positive bias, one could say. Metals were the star performers, though, with the index soaring close to about 3%. Tata Steel was the one rising about 3%, posted strong Q1 results. We also saw JSW Steel snap its two-day losing streak, whereas if you look at the mid-cap index, that one outperformed the blue chips this time again, while banks were the ones underperforming in yesterday's session. If you look at Adani group of stocks, those ones surged in the last hours of trade, with Adani Enterprise ending about 2% higher. And of course, we are in the thick of earnings, so let's get your whole roundup from the earnings corner. And in the auto space, we did see Tata Motors, which reported a 41% jump in their first quarter revenues. Tata's Jaguar Land Rover JLR, those sales rose by about 57%. However, the company has warned that their annual shutdown in JLR will perhaps lower the production as well as cash flows in Q2. The automaker has also now gone ahead and proposed to convert the DVR shares into ordinary shares. So we're going to see a lot of action coming up for the Tata Motor stock. As for Bajaj Auto, which also declared its results yesterday, the company reported a 29% jump in revenue and a 42% rise in its profits. Bajaj's margins too have expanded to about 19% in this quarter, but was slightly below what was estimated. And if you look at engineering and construction major L&T, that one largely met expectations in the first quarter. The company saw consolidated profit of 46.5%, coming in at 2,493 crore rupees. The company's order book too has crossed 4 lakh crore rupees for the first time. But more importantly, the company's board has approved the share buyback of 10,000 crore rupees at a 17% premium, and there's also a proposal to buy back 3.33 crore of shares with a maximum price of 3,000 apiece. So this is what the board has decided. They've also recommended a special dividend of 6 rupees per equity share, which has been approved for the shareholders. So a lot of action that we're going to see for L&T as well in today's day. But finally, we also had Asian Paints, which profits have mildly beat estimate, we could say, grown in about 52% on a year-on-year basis. Revenues have missed expectations, but EBITDA margins have improved and come in at 23.1% versus the 18.1% on a year-on-year basis. Domestic decorative business, that one saw double-digit volume growth, but the macro uncertainties, forex tightness is what has really impacted the Asian markets for Asian Paints. So that's another counter that you need to be looking out for. But also, let's tell you all the earnings that are likely to come through today's day. Well, we do have a host of Nifty 50 companies that will declare their results. Let's look at first the pharma stocks. We do have Dr. Reddy's Laboratories as well as Cipla, which will be declaring its results. Looking at Cipla first, it is expected to report a steady set of numbers. Analysts are anticipating strong growth in the drug maker's India formulation business in order to compensate for the subdued US sales. Cipla's net profit is likely to be seen about 15% higher on a year-on-year basis. The market will also be closely monitoring any updates on the anticipated US FDA classification for the Cipla's Pithampura manufacturing facility. So that's all the action we could get to see from Cipla. Whereas for Dr. Reddy's Lab, well, there we're expecting profits to be rather on a flat note or perhaps even decline on a year-on-year basis for the first quarter. US sales, though, there are likely to grow at 35%. Meanwhile, India's revenue is expected to grow just about 6% on a YOY basis. This could be led by the steady market share gain in their core brand. So both of those pharma stocks is something you need to be looking out for. But from the banking front, we do have India's fourth largest private sector bank, that is Axis Bank's numbers, which will be out, and we are likely to see close to a 50% rise in its profits. Now, trends on slippages as well as the overall asset quality should not be worrisome, as well as broadly stable is what most analysts are predicting for Axis Bank. We can expect the bank to make higher provisions for the expenses pertaining to the merger of Citibank with Axis Bank. So that's what you can be looking out for in terms of Axis Bank. But finally, in the IT space, we will be following what Tech Mahindra has for us, and we are expecting to see a muted quarter or a sequential decline as well in the communication revenue, as well as flat growth in the enterprise segment. Deal wins are expected to be modest. Overall, weak macros, lower tech spends, as well as Q1 seasonality is what is going to weigh in for Tech Mahindra's Q1 performance, and we've seen that across IT players. So Tech Mahindra perhaps in the same line as the others. And let's also get you some news from the startup space, where the largest institutional investor in crisis-hit Byjus has come out and said that poor corporate governance is what prompted it to exit the board. Now, the Dutch investor Prosus contradicts the previous statement which came in from Byjus, which claimed that the investors resigned from the board as their shareholdings had fallen below the minimum threshold. Now, Prosus has gone on to say that even though the edtech grew considerably over time, its reporting and governance structures did not evolve sufficiently as the company went to scale. Now, remember, on 22nd of June is when GV Ravishankar, who represents Peak XV, formerly known as Sequoia, Vivian Wu of Chang Zuckerberg Initiative, as well as Russell Drainstock, who represents Prosus, were the ones that resigned from the company's board. In the process, there is a reconstitution of the board which is likely to take place. And looking onwards, we also have Byjus, who's come out and onboarded independent members. Just last week, we saw them appoint a former SBI chairperson Rajneesh Kumar as well as TV Mohandas Pai to their board's advisory committee. And to all the political developments, now we've seen quite a logjam that has continued and persisted during the monsoon session of the parliament, and the opposition parties now insisting that Prime Minister Modi make a statement in the floor of the House about the whole Manipur issue. Prime Minister Modi, in fact, went on to reportedly slam the opposition as directionless, and then he went on to deride the new grouping of India, saying that India is mentioned even in East India Company as well as the Indian Mujahideen and the Popular Front of India. Now, this statement from the Prime Minister has now stirred an even bigger controversy, with the opposition stating that such words from the Prime Minister will not stop them from holding him accountable. Opposition plans to now move a no-confidence motion against the BJP in today's Lok Sabha session, and the Congress has in fact issued a whip to all of its members to remain present in the House. Let's listen to some of those political reactions that came after those statements were made.
हमको गर्व है अपने प्रधानमंत्री आदरणीय मोदी जी पर। उन्होंने एक नई आशा जगाई है। आज 24 में भी हम ही आने वाले हैं। उन्होंने एक बहुत बड़ी टिप्पणी की कि इंडियन नेशनल कांग्रेस एक अंग्रेज ने बनाया था, ईस्ट इंडिया कंपनी भी अंग्रेजों ने बनाया था। आजकल लोग इंडियन मुजाहिदीन भी नाम रखते हैं, इंडियन पीपल्स फ्रंट भी नाम रखते हैं, तो चेहरे पे चेहरे लिखाते हैं, सच्चाई कुछ और है।
मणिपुर जल रहा है, रेप हो रहे हैं। मणिपुर में मकाना जलाए, और आप वहाँ मणिपुर की बात हम कर रहे हैं, मणिपुर की बात हम कर रहे हैं, प्राइम मिनिस्टर ईस्ट इंडिया की बात कर रहे हैं। इंडिया मीन्स ईस्ट इंडिया बोल रहे हैं।
Well, we are likely to see that logjam continue unless we do hear the Prime Minister speak and address in the floor of the House. But let's move on to the latest trends that we are catching up on. And well, do you remember the time when during the pandemic, there were videos of people stocking up on toilet paper or TP, and that really went viral? Well, now a similar situation has unfolded, though over the weekend in the US. We saw this time around NRIs queuing up outside supermarkets for just one sole aim to get their hands on some rice. Yes, that's right. I'm talking about a normal rice that we eat, a staple for Indians. But why has this come to be? Well, a few days ago, we did tell you that India has now decided to ban the export of non-basmati rice. And in the rush to supermarkets to get their hands on that is why we saw so many NRIs trotting there. Now, several US media have reported and stated that bags of rice literally flew off the shelves across grocery stores, with buyers being mostly Asians, as this comprises of their staple food. Now, several grocery stores have increased the price of rice, as a bag of 9 kgs of rice, which normally would cost about $15 to $16 earlier, is now being sold for as much as $46.99 in the US. And having already dominated the short video as well as social media markets, TikTok is now looking to compete with Spotify as well as Apple Music. That's right, TikTok has announced a new subscription-only music streaming service called TikTok Music, and this has been opened up in the Brazil and Indonesian markets. Now, users can listen as well as download and share songs with TikTok Music using their existing TikTok accounts. Now, this includes the catalogs of major record companies, including Universal Music, Warner Music Group, as well as Sony Music. TikTok's music app will allow you to stream a full versions of viral TikTok songs as well, discover music as well as recommendations, and access lyrics in real time of all of this music. And to cues you need to be watching out for, well, we will be getting you live also Fed Chairman Powell's comments, because the FOMC will announce its decision on interest rates later tonight. That will happen perhaps at post 12 a.m. But we also have the IMD, which has gone ahead and issued a red alert in Raigad, Pune, Satara, as well as Ratnagiri districts. An orange alert has been issued in Mumbai, Palghar and Thane. So you need to be looking out for what the weather is really telling us and what the climate. We've been seeing such a lot of rain across the country, and that is something we need to be keeping an eye out for. But with that, it's a wrap on this dose of Newspresso, and hope it was useful and informative and gives you that kickstart to the day. But don't forget to come back tomorrow, same place, same time, because I will be right here with your fresh shot of Newspresso. But from everyone putting this show together, thanks so much for tuning in.